What's up? What's up? Let me test. Let me put a microphone on. Let me know in the chat if you can hear me good. And I'm using this. Hold on. Let me know if you can hear me good. Because I've got a microphone, but I want to see. Give me one sec. All right, let me know if you hear me now. Should be good. All right, cool. Thank you, folks. All right, so what's up? First of all, this is me. But because of how my laptop is shaped and because of my stand, you will not see me very well. But either way, I am here. I'm a real person. Um, so the aim today is pretty much just kind of go over options, an intro to options. I got a lot of you guys to fill out, what you're struggling with, what you know, what you don't know, what you need help with, all that kind of stuff. So we're going to cover a load of those things. The aim is just to go over it for the next 3 weeks at least. I'll decide based on how it goes and based on feedback if we do more or not. But so far, I think, I've seen a lot of people with a lot of interest. So the idea was first just to help a few people. But in the end, I thought, well, the amount of people that showed interest and the amount of people that actually really have, stories where, they want to make it out and actually start trading properly, I thought, what, let me just open it up a little bit more to a few more people. So, we've got about 20 of us. We're just going to be, again, meeting next couple Fridays as well as today, and we'll take it from there. So first and foremost, I'm going to start sharing my screen. I have, hold on a sec. I have a little presentation, which is, let me see. All right, here you go. One sec. Let me know when you guys can see it. But I'm going to share my screen and we'll start off with a little bit of a presentation I made just in regards to options and trading. So just when you can see it, and then we'll take it from there. All right. So yesterday night I said everyone who trades options needs to understand every bit of information on this screenshot, right? And it's quite funny because a lot of people trade options and a lot of them don't know, any bit of information on the screenshot. And some people are still successful, some are not, all this kind of stuff. But pretty much, like I said, I'm going to dive into that today. We'll dive into the, into the basics of this today. If you want a more in-depth analysis, you can obviously go to the Discord and all that kind of stuff. But yeah, today is kind of just a day to go through this, go through the markets, go through the market's lifetime because the markets are still open for another 2 hours, and then we'll take it from there. So to start off with, right, you guys see the screenshot. You guys see it says run $21 call, right? To most of you, this probably doesn't make any sense. To some of you, it might make a bit of sense. Again, some of you have traded many times, some of you have not traded. Either way, the first thing I want you to see on this screenshot is, or first thing I want you to know is there's a lot of data thrown at you, right? Um, the funny thing is, there's so many different mathematical equations, factors that, percentages, analogies that come into options trading. But when you just know a few of the what I'd say is the most important things, you will thrive, you will succeed, and obviously you will improve your trading. So first of all, right, I'm just going to start with the real basics. So it says buy RUN $21 call 96, right? So the first thing I want you to know here is RUN is just a ticker symbol, right? Just like Apple, Tesla, just like Microsoft, just like Delta, just like United Airlines, Starbucks. RUN, that is a stock, right? Now it says $21 call on 96. If you're in Europe, that is June 9th. If you're in America, that is September 6th. So just make sure you know what you're buying when you are buying it and where you are, because I know a lot of people around the world are trading options and some of them sometimes get confused with the dates. So I'm gonna start with the volume here. So the volume, that is the activity, of the number of contracts in that option market. So there are 396 active option contracts in this market. Volume/volatility is how easy and how difficult it is for you to get in and out of a trade. That's the number of buy and sell orders that are happening during that period. The higher the volume is, the easier it is for you to trade. Sometimes when you have options with really low volume, like 3, 4, 5, very low, it can be difficult to get out of the trade, and some people will struggle with that, and then they wonder why they can't get out of a trade. Next up, I'm gonna go with the open interest, right? So actually, you know what? Just another thing about volume, right? Volume for options and volume for stocks is a lot different. So even if there's a lot of volume for the options, if you're trading purely stocks and not options, you might not be able to get in and out of the contract, that easily. But either way, open interest. So this is the number of options contracts that are still open right now. So the number of the volume is the number of active contracts, open and closed, different activity. The open interest is purely the number of contracts that are still open. So when you buy this option contract, you are a part of the open interest. So here we have the Greeks, but before I touch on the Greeks, I'm just going to tell you a few things about stocks and options because a lot of you guys I know do not know the difference between stocks and options, which is okay. Right. So first of all, foremost, if you guys haven't checked out the stock option starter pack, go check that one out. It's a $99 one-time fee, and it has 3 hours worth of videos, content where I break down stuff, lifetime terminology, all that kind of stuff. Either way, if you want, to know more, just send me a DM. But anyway, let's talk about options before we talk about, the Greeks on options. So an options contract is most simply an agreement between two parties for the sale or purchase of some asset, which is a stock. So To put it kind of a little bit more simply, right? When you're buying options, right, you don't have to own the stock. You don't have to own the stock that you're trading on. So if I'm trading Tesla options, I don't have to own Tesla shares. If I'm trading Amazon option, I don't actually have to own Amazon shares. So the reason that's pretty cool is because in a way you're pretty much leveraging 100 contracts, sorry, 100 shares every time you buy one contract. And what I mean by leveraging it is, again, you can make money off Tesla, Amazon, Meta, Google, Starbucks, Nike, whatever, without owning the stock when you trade options. Whereas when you buy, 100 shares of Nike or 200 shares of Nike, you make money when it goes up or down. The same can be said about options, but you don't have to own the actual share of that company. So let's go like this, right? We have here run, right? RUN. So $21 is the strike price. That is the price I would like to see run to. No pun intended. We have the bid, which is how much people are willing to pay to get one of these. So 42 cents, which is actually $42. I'll get into that in a sec. And we have the ask. That's how much people want to sell this option contract for. So in each contract, there are buyers and sellers. I might bid $42. This is $42. And if I don't have the contract, they might not sell it to me for that price. I might have to increase my price to 45, which is what they're asking for, right? So the mark is usually in between the bid and the ask. It's like when you go to the store, you want to, and let's say you're negotiating, you want to bargain, you want to buy something for $42. The seller wants to sell it to you for $45. The mark 44 might be where he lets you in. It might be where he sells to you. It might be where you find an agreement. The last trade is where it was last bought at. The previous close is where it closed at the day before. So yesterday evening, or when market closed, it was $40. The high is where it was the highest point of today, $52. The low is obviously where it was the lowest. So you have what it closed at yesterday, the highest point it got to today, 52, and the lowest it got to 31. Chance of profit, that's pretty obvious, How likely is it that you make profit by buying this? And yeah, the IV, 63%, that is the implied volatility. So I'm not going to touch on the implied volatility in detail just yet. I'll now touch on the Greeks, okay? And I know a lot of you wanted to know about the Greeks, so let's talk about the Greeks. Now, one thing I do want to say is before you guys leave this thing or whatever the situation is, make sure you drop a like. It does benefit the channel in a long way, in a great way. All these presentations, videos, all that takes a lot of time, so please do show some love. Now, the Greeks. The Greeks are your navigation tool, and they're going to help you navigate the option market. They're going to help you make money. They're going to help you trade. They're going to help you get in and out of contracts. They're going to help you protect your capital. The Greeks are super important. Okay. So, delta. What is delta? So, delta is how much your option will move for every $1 change in the stock price. So, if I'm trading Tesla calls, my delta is how much my option will move every time Tesla moves by $1. The actual Tesla stock moves by $1. Okay. So it's pretty much an estimate of your option expiring in the money, pretty much. And we'll get into in the money, at the money, out the money, all that later on. So your delta will be between 0 and 1 when we talk about calls, and your delta will be between 0 and -1 when we talk about puts. Calls are when you think the stock will go up. This is a call. Puts are when you think the stock will go down. And I know I'm throwing a lot of words and terminology at you, but this, again, hopefully this should be recorded and uploaded later. But yeah, so this is a delta of 0.39. So this actually means I have a 39% chance of this option expiring in the money and a 61% chance of this option expiring worthless. So it's actually more likely that this expires worthless than in the money. So what does that mean? You probably want a delta which is closer to 0.5, 0.6, because it means you have a more likelihood of having an option expiring in the money and less likelihood that it expires worthless. So, in fact, before I get into any of that, any questions so far? Let me know. I need to go to my phone to see the chat. Let me know if there's questions. If there's no questions, that's always a good thing, I think. Any questions? I cannot see the chat. Okay. Okay. So far, no questions. That's good. All right. So, like I said, I know I'm throwing a lot of info at you, but either way, let's talk about gamma now. Okay. So, gamma is it affects the rate of change of an option's delta. So, what that means is, do I have an example in here? I do not. Okay. Either way, so the gamma. Yeah, so the gamma is the rate of change of delta, right? So if I have a stock which is $10, or a stock which is $10, and my option price is $2, and the delta is 0.5, but then the stock jumps up $1, that means my gamma is 0.1. Now I know that is very confusing, but again, the gamma controls the rate of change of delta. So what it means is, so my gamma here is 0.237. That means if this stock run jumps up by $1, right? The delta here will increase to 0.627. The gamma plus the delta will tell you how much the option contract will move when the stock moves by $1. So all you need to know is if this stock goes up by $1, this delta will be higher. The reason I know how high the delta will be is because the gamma will tell me that. Does that make sense to everybody? The gamma just measures the rate of change of delta. Okay. So the opposite is also true if the stock sells off. If the stock drops by $1, again, you can add the gamma with the delta and you'll know how much your option contract will drop. Okay. Gamma is not as important as delta, but it's just more to help you calculate if you ever need to. Theta, this one is very important. So when you are buying an option, right, you're always fighting against time. That's why a lot of people like to trade futures instead of options, because futures do not have theta. Options are exponential and options are always losing value. Every minute, every day, every hour, they're always losing value. So that's why when we trade options, we want our play to go in the right way as soon as possible so we can actually make money. Okay. So the theta here is negative. The theta is always going to be negative, right? The theta is minus 0.0562. Does anyone know how much dollars you're losing per day? Is it $5? Is it $50? Is it $500? Does anyone know? Well, in this case, because it's minus 0.05, it is 5 cents. Now, keep in mind, every time I show you something, I showed you this, which was 0.42. It meant $42. I showed you this, which was 0.45. It meant $45. I showed you, the mark prices, all that kind of stuff. And now I've shown you this. All of these are, as you can see, 100 multipliers. So the reason that is one option contract controls 100 shares. So when we trade and something costs 0.42, it doesn't cost 42 cents. It costs $42. Everything is multiplied by 100. Okay. Now, one thing to note is when you have options expiry, which are soon. So for example, this contract, which expired, this is from yesterday, right? It expired yesterday. The contract expired soon, so the theta would be a lot higher than if the contract expired in 3 weeks, 4 weeks, 5 weeks, 6 weeks, right? So when you leave a lot more time on your expiry, your theta decay is a lot less. Make sure to remember that. Your theta decay will always be a lot less when you have more time on your contracts, which is why, especially in this kind of market right now, if you're trying to buy calls, longer term calls, you need to put time on your contracts, right? If you're someone who usually, buys an option contract which expires in 2 weeks, put 3 weeks. If you usually buy with a 5 week till expiry, buy 7 weeks till expiry, etc., etc. Okay. Now, let me touch on Vega. So theta is always negative. Theta is always eating away against you when you're buying option contracts. Funny enough, you can also sell option contracts, and then theta works in your favor. But we're not going to get into that today. We'll get into that in another session. So we got Vega now, right? Vega is the amount that an option contract price changes based on a 1% change in the implied volatility. So based on this implied volatility, this Vega number will change. So every time, this moves up by 1% or down by 1%, my contract will move up or down, but based on Vega, right? So in my option starter back, I have a whole section dedicated to Vega, and it's for good reason. I have one dedicated to theta and one dedicated to Vega. It's really important, So in this case, right, you have a Vega of 0.0099, right? So it's actually 99%. Vega can go past 100, Vega can go all sorts of places, right? But if you have let's again touch on implied volatility. If you have implied volatility of 63%, this means the stock is expected to move up or down by 63%, right? So if this was 20%, it will mean the stock is expected to move up or down by 20%, right? So again, implied volatility and Vega have a direct correlation. Again, I'm not going to get too much into the technicalities and examples today, but just so you have an idea, this will affect this. Vega, implied volatility affect each other. And then lastly, I'll just briefly touch on really, in fact, it's the least important one of all of these, but you might need it someday. This pretty much just measures the price change of options in regards to interest rates, US Treasury bonds, that kind of stuff. It's not as important. So back to options, right? So option contracts gives whoever owns the option contract, whoever buys it, gives them let's call it a potential deal to be locked in at a certain price point to buy a specific stock. So if I look at this, right, I bought a 442 QQQ call, right? And at that point, QQQ was at 450. So you know what that means? That means that I had the right, if I wanted to, if I really wanted to buy QQQ shares, I had the right to buy QQQ shares at $442 instead of 450. So it sounds a bit confusing. Put it this way. A good example is if you wanted to buy, let's say, a flight or, I don't know, Beyonce tickets, right? And currently they were at 440. And when they were at 440, I said, you know what? I'm going to buy some tickets with, a 442 call on the Beyonce tickets. And if it does run to 450 or it runs to 700 or runs to 800, I have the right to buy those tickets at 442 instead of the high price. So when you buy calls, you have, you can lose everything you put in. I put in, do the math on that one. I put in 455 times 6, and I could lose all that money, but my potential rewards were unlimited because this QQQ, this Beyonce tickets could go to 700, it could go to 800, it could go to 900, it could go to 1,000, to 20,000. And obviously, if that happened, my money would start going up, right? That is the strike price. 442 is the strike price, right? The strike price is the price you think the stock will move to before a specific date. The strike price is 442. I believed the QQQ would reach 442 before, by the end of the day on April 10th. QQQ reached not only 442, not only 443, not only 445, but all the way to 450. So of course, the profit starts to increase, right? Everyone who buys an option contract has to pay a premium, and whoever's selling this to me will receive that premium, right? So think of this, think of buying a call or buying a call as like paying a premium like you do with insurance, right? I'm buying a call for, I'm paying this much premium per contract so that I have a right to buy the shares at this price. The shares reached a way higher price, and if I decided to exercise, right here, exercise, I could decide to have all the shares at 442. I could own the shares now. Again, it's a little bit confusing, first off, But the key things to remember, just looking at this, right? You have the strike price. It's 442. That's the price I would pay if I chose to exercise my option. Exercising my option means I buy the shares at that price. You have the premium. The premium is what I paid up front to have that right. And the premium is like I'm paying that premium to ensure that I can have the shares at this price, even if QQQ runs to $500, right? You have the expiry date. Expiry date is when all your when your contracts will expire, right? I had an expiry date of yesterday. I could have had today. I could have had in 2 months, 6 months. But the longer term out it is, the more expensive it is because it is more likely that your stock will move in that direction before your date. So when you have a shorter term, it is more risky. Longer term, you're protecting your premium. Then you have this down here. It says view QQ. You will always see what price the stock is at, right? Here it says it here, it says it here. So you'll know even if I have a 445 call or 435 call or 420 call, I'll know, hey, the stock price is above my target or below my target or whatever, you'll know. So yeah, if I was to click exercise, I would end up being able to buy my QQQ shares at 442, and I'd already be up $8 per share. So sometimes a cheaper way of buying contracts for the long run. Okay. So if you're buying, you want to finish in the money. If you're selling, you want it to expire out the money. Usually, most of you will be options buyers. You'll normally be a seller when you know a little bit more about options, when you're more advanced, when you know how to really make money in the markets, then you'll be a seller. I have been an option seller a few times in my life, and I do it just to collect premium, especially when the markets are very uncertain. So if you're buying this contract for 455, someone else is receiving the contract for, receiving the premium for 455 and selling the contract to you. Don't forget, one contract controls 100 shares. So here, I'm in control of 600 shares. So if I chose to exercise all 6 contracts, I would be buying 600 shares for $442. Hopefully that makes sense. Okay. Again, as I said, if you're buying a contract, you want it to end in the money. In the money means when the current price goes above your strike price. Out the money, well, I'll explain out the money. If I bought a QQQ $470 call, that is out the money because QQQ is way lower than my strike. If this was 472, then I would be out the money. Again, when it expiry comes, you want to be in the money. That's how the money will start coming to you. So whoever sold me this, by the way, thank you very much. All right. So let's look at it with a chart, right? Let's say this stock is, I don't know. Someone in the chat, give me a stock. Let me make sure this is interactive enough. Someone in the chat, give me any stock. And I'll answer the questions all at once towards the end. But anyone give me a stock. Give me a name of a stock. Let's see. Tesla. Okay, cool. So this is Tesla stock right here, okay? Right now I have Tesla stock. It is currently, let's say it's $140, right? But I'm buying a Tesla $145 call and it expires in 3 weeks, okay? So this week announces they're, releasing flying cars. And those flying cars can take you from America to Asia in 6 hours. Let's just pretend, right? Now, Tesla stock might fly from 140 or 145 all the way to 200, right? Great. We're excited. We're happy. Now, that means Tesla stock is currently way past my strike price, right? My strike price was 145. Tesla is now at 200 and I'm in the money. But guess what? I don't just make money because of that. I can now buy 100 shares of Tesla at $145 instead of all the way at $200. So I'm even more happy, right? Does that make sense? Before I got in, Tesla was 140 or 141 or 142, and I bought a 145 call. Within a few days, it ran up to $200, and that means my contracts are not in the money. And then I would make, for hypothetical, $55 on my contract. Now, at the same time, right, as it reaches this price point, you need to remember it can go the other way. If if Tesla was 140 bucks and I bought a 145 call thinking it's going to go up, and they announced that Elon is still focusing more on politics than he is on his company Tesla. He's more focused on other things. It might drop to $100, right? From 140 or 145 to $100. Now I lose $45, right? No good. Okay. Why do I lose money? Because the stock is going in the wrong direction. And again, you know, the expiry is coming. So here, oh, you know what? Let me show you something as well. This can also help you out. If you're buying any kind of option contract, right? This is Robinhood, for example, when your price point is listed, if you go up, this is for calls, you go up, you're out the money. If you go down, you can buy in the money. But look at the price difference. In the money, way more expensive because you have more of a chance of succeeding. Out the money, cheaper because you have less of a chance of succeeding. Hopefully that makes sense. And just to recap again, just so you keep on your toes, this is the premium. This is how much I'm paying. And again, one contract is not $13. It is $1,300 because we're using multipliers of 10, right? In this case, this is the strike price. 450 is a strike price. 452.5 is a strike price. 447.5 is a strike. 445 is a strike price. All of these are strike prices. These here are premiums. This is what I will pay to be able to get into the trade. And this is the current stock price. These here, dates, September, these are all the expiry dates. So I would need SMCI to move to these prices before those expiry dates. And then again, look, if I wanted to just click on that contract, I would know, where the Greeks are standing, what I'll be looking at, the implied volatility, all of that is listed right there. So pretty simple, right? Any questions? So by clicking on exercise, would you get the total return? What do you mean by the total return? Clicking on exercise, you get your profit, but you also have to pay. Like you just buy the shares at the strike price you chose. Is that what you mean? Or would you have to go to trade and then sell the options? Now, when you exercise, so let's say I had one contract. If I exercise, I would just get into straight. I'll just get I'll get 100 shares at 442. Does that make? I think that answers your question. If I understand what you're asking correctly. Why does the chance of profit say 27.44%, but the delta is 39%? Okay, let's go back. So chance of profit and chance of being in the money are two different things. Delta measures the chance of you ending up in the money. Chance of profit is purely your chance of profit. You don't always have to end in the money for you to make profit. Okay, so it's two different things. Does that make sense, Jeffrey? Good question. How do you know when to get out of a trade? Great question. All right. Think about it this way, right? In fact, you know what? We're lifetime, right? The markets are up. Let's go lifetime. This is why we did it during market hours. All right. Question. How do you know when to get out of a trade? All right. Anyone give me a stock? Any stock? Give me any stock on the market, and I'll show you how you know when to get out of a trade. Apple, great stock. This stock has been on the run. Yeah, anyone, give me a stock. We'll talk about it. How do you know when to get out of a trade? Great question. Okay. If I bought Apple calls today and I bought $200 calls, which is actually what we discussed in the Discord earlier today, funny enough. All right. Let's say I bought anywhere here, 192, 190, 192, whatever. The moment I hit my price targets, for example, could be a double top, that's time for me to get out of trade. That's one. Two, the moment I am in enough profit, 70s, 80s, 90s, that is enough profit. Three, the moment the chart flips bearish, it didn't completely flip bearish here, it did reverse for a little bit for a pullback. It will be a nice time to get out of trade in any of these candles, break below the moving average. That is for day trading, right? So you have price targets, right? You have price targets, you have resistance levels. Here was a resistance level. Why? Because price failed to break above that level twice in a row, right? This level right here. Price went up to that level, came down, went up to that level again, came down. Guess what? The second time it hits that level and comes down, I might think, maybe it's time to get out, right? This is what we call a resistance level. Resistance is where sellers are trying to hold a stock below. Here, you can see buyers pushed the price up, sellers took it away, took over. Again. So it's like supply and demand, right, in real life. If everyone's buying down here, it's demand. If everyone's selling down here, it's supply. They're getting rid of it. So this is a nice price point to take profit. Otherwise, if you see the stock consistently uptrending, you just can stay in the trade. Obviously, here pull back, maybe it's a good time to get out. Here pull back, maybe a good time to get out. But for example, another stock, right? That's not even clean. There we go. Here's a nice clean one. Here, if I'm in calls, thinking it's going to keep rising, there's nothing telling me to get out yet. Nothing telling me to get out yet. Right? So I'll just keep holding right now. But on the other side, if I'm happy, if I'm happy with what I've got, I can get out. If I'm going into work meeting, go out. Sorry, sell out. If I'm entering the plane and I need to fly, sell out. If I'm going out for a run, going to the store, sell out. If it's expiring the same day, sell out. This is if you're in Alibaba calls right now, this is gonna continue running. You're in there, right? If you're not in the calls, you don't want to get in up here. It's already jumped up from 102 to 106. You don't want to get in there, right? That's a great question though. Who said that? Steph, well done. How do you know when to get out of trade? That's a great question. But speaking of that, look at this. This is also what we do, right? When it comes to trading, we draw levels. So you know when to get out of trade because you have drawn levels on a higher time frame, right? This is a strong level of support. This is a great level of support, right? So this level of support is very nice if you want to get calls off that level, right? It bounced there. And what I like to do, if you're a beginner trader, this is TradingView. Everyone can get this. It's free, right? TradingView. Go to the higher time frames, the weekly chart, the daily chart, right? Even the monthly chart, and draw strong levels of support, strong levels of resistance. I do this for different stocks all around the market. Different stocks, strong levels of support, strong levels of resistance. S&P 500, SPY, you've heard of SPY, right? Draw strong levels of support on the daily chart, strong levels of support on the weekly chart. It will help you so much. Again, if we're trading and we're, I'm going to go, now let's see, what's another stock? Give me, someone said Hood, right? Hood, right, here we go. Hood has a strong level of resistance here. So this is where you would like to sell, right? If you scroll all the way back, you see, oh, wow, it rose from $15 all the way up to $65. Great. This is so fun. But when it starts coming back down, breaks this level, you're like, okay, you know what? Let me get out of the trade. It's been a good ride. Let me get out of the trade, right? QQQ, strong levels of support. Strong level of support, we broke down, we broke below, we sold off. Strong level of resistance, right? Broke below that as well, sold off. Next time we get back up here, we might get rejected. Old levels of support can become new levels of resistance. That is very common in the stock market. Old levels of support can become new levels of resistance. So in the future, that could be a resistance level, right? So how do you know when to get out of a swing trade? Let's just go back to, let's click something random. PayPal, here's a good one. That's a great one. Look. And you see how it doesn't matter what stocks I'm putting up, got levels drawn on them. So PayPal consolidated, which means price stayed around the same price points for like what? From March 4th to March 20th, so like 2 weeks. And then it sold off. If I was in puts for PayPal, puts meaning I'm taking it to the downside, I'm shorting it. What's a good level to get out of a trade? Well, I have a strong level of support drawn on the higher time frames. So boom, I'm out of the trade somewhere around here, somewhere in and around this level. And guess what? It started rising again because it's a strong level of support. Once we reach that level, buyers try and keep the stock price above that level. So we try and, when we're buying puts, we try and buy puts down to the level of support and sell them when you get there. If we're buying calls, we try and trade them up to the levels of resistance. So if you're in calls now, look, this is a great setup. Calls here from yesterday ran all the way up to my level of resistance. It would have been a nice price point to sell around 64. You would have got a $7 move. And you can see this on the 4-hour chart, right? My level of support, we hit my level of resistance, we came back down. It's like supply and demand, right? Let me see. And this is the fun thing about doing this live, right? You can see if we go intraday, see what PayPal is doing right now. Look at that. So the first 2 hours a day, I did trade. It shouldn't have been traded. If I had waited, sort of break above the moving averages is what I have here. The green, orange, and red lines, the moving averages, what is my indicator that I use. We broke above, we retested the moving average, we pushed higher. Retested the other moving average, pushed higher. Retested the other moving averages again, pushed higher. This is the kind of trades I like to do. It's what I did yesterday with QQQ, if you guys saw, right? I circled this price point from this morning as a great entry point for calls. And I put it in the Discord to let them know this is a time for calls, right? We broke above after the choppiness. We broke above, and the moving averages crossed the upside, and now pushed up, sold off, pushed up, sold off. This was an easy call play. We reached 455.55, and I called it in the Discord. I said this is the time to get in calls just 2 hours ago, and look, it's that easy. So again, yesterday, same thing for those who traded QQ puts. There's a bit of a consolidation, a bit of chop, and then it dropped. I drew this box yesterday. I said if we can't break out this box, we can't break above the moving averages, it could sell off. That's how we made, I think, 480% on the puts yesterday. Sold off from 450 down to 433, right? If you had put $300 in yesterday's call out, you would have made, I think it was 1,700 just from one contract, right? Just from, we did it lifetime yesterday. I drew this box lifetime, right? I can even extend this box a little bit because it failed to break above that today. Look at that, actually. And then we finally did break out. Look at that. You see, I can just draw this box along. Wow. This is a great zone. So I got to tell you guys again, this was really the play yesterday. And this is why yesterday I was able to make that 3,000 in like 25 minutes. The levels will draw themselves, but you need to also draw the levels. The levels will show themselves. You need to draw those levels. Let me check the chat if there's any questions real quick. Did you say you would be uploading this live? Yeah, I'll try and upload this live for you. What time of day do you prefer to trade? The market open or just whenever? Whenever, really. Whenever the trade setups come out. I'm telling you, there's so much money to be made in this market. It's really there. And this is what I do if I want to find trades, right? I'm going to show you now. Also, please drop a like on the video. We've got to get to at least 30 likes. Come on now. All the people in the Discord did show love yesterday, so I'm grateful for that. Come on, in a bit. Yahoo Finance, right? Trading View, and look at them, right? Coinbase. Let's see what Coinbase is doing. Let's see what crypto is doing. Oh, this was a pretty good setup too. After all that noise and chop at the beginning of the day, we didn't really sell off. We held the run, consolidated, pushed out again. And then I can start to look at these stocks and say, okay, why is Palantir down? Oh, okay, Palantir's not really going anywhere. Almost a double bottom here, but kind of fake. Not really a triple bottom either. This is the 5-minute chart. Okay, I look at my 50-minute chart. Not very clear price action. Nah, let me go to another stock that I have. Okay, I watched this here as well. Oh man, this should have been a banger. Let me put that in the Discord real quick. It's on heat. If you're in the Discord, by the way, go check the trading discussions chat. Excellent on fire. Right. So it was looking like puts at the beginning of the day. 5-minute chart was pretty bearish. 15-minute chart, pretty bearish. But then we got some consolidation, and this is a level of support I'm talking about. Right? This is the kind of level of support I'm talking about right here. Look, consolidation, 50-minute chart, we held above this level. That's a strong level right there. Right? We tapped that level 1, 2, 3, 4, 5, 6, 7, 8 times, and we started just taking off. Once the moving averages crossed to the upside, the golden cross, yeah, I should have been in the course anywhere around, probably around here, probably maybe, yeah, on a retest of the moving average before we took off. Does everyone understand that? Everyone who's in the chat, everyone who's watching, why this was cause? We failed to break below the level of support. We held well, and buyers start to, look at this crazy work. They already tried to take the price up at 8 a.m. and it started to push and pulled back to push higher every time, pulled back, push higher. It consolidated again along my level of support, consolidated, and then just took off again. Does everyone know why we should have took pause there, right? So in this case, I would have probably bought 100, when we were down here at 99, I would have bought $101 call or $102 call, because my next level was around 101.72, right? That's plenty of money to be made right there, just with that move from 99 to 101. That would have been a good time to take profit. If you want to hold, no, nothing wrong with that. But sometimes when it consolidates, like it did, it's ready for the next leg up. That's exactly what happened. Do you prefer looking at the 1 hour? I like the 5, the 15, the 1, the 4, and the daily. For swing trading, I like the highs, the daily, the 4 hour. For day trading, maybe 1 hour for the levels, but 15-minute and 5-minute for the entries. Hopefully that covers your question. But yeah, XM right there was a very, very obvious day trade, and I didn't take advantage of it, unfortunately. Is swing trading the same as options? Swing trading is not the same as options, but you can swing trade options, if that makes sense. I'm going to do more sessions, like I said, but the invites are gonna, they're gonna vary, because I need to make sure I group people with the right people. So yeah. Swing trading is just buying a stock and holding it overnight, or holding at least a night, and then continuing holding that, for a couple of days or more than a day. Day trading is just intraday. Options are, you don't have to own the stock to trade options, right? Hopefully that makes sense. Check the chat. Also, I just released a guide. I know some of you have seen it just this morning, literally an hour ago. So make sure you check that one out as well. It just explains all my swing trading strategy, day trading strategy, all that kind of stuff. Let me know if you're in the chat. But yeah, the thing about these sessions, when it's live time, you can see all this stuff. Let me just drop the link in the chat. Okay, so I'm so happy we get to see this live time, right? And listen, doesn't matter what you do, if you just do this basic thing in the market. Take profit at levels of resistance when you're in calls, right? Buy at levels of support. You'll be okay. Now, if I bought calls up here after the cross and it started uptrending, if I bought calls and then it started suddenly downtrending, that's fine. Especially if it breaks below my level of support, that's fine. You just get out of the trade. You manage your risk, you keep your money, you protect your capital, you move on, and you live to fight another day. What's going to hurt you is if you think it's going to sell off and you buy puts, which is fine, and it starts reversing, going up, 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 and you're still holding the puts, now you're just wasting time, you're wasting your money, and you're just going to get smacked by the market. Does that make sense? We want to risk minimal to gain a lot, right? Celsius, you guys know the energy drink Celsius, right? We are in calls in the Discord in the small account challenge, okay? So we bought Celsius when it was just breaking out of the zone, right? $28 around. It ran up to highs of 37, 38. Great time to take profit. Those calls expire in a few weeks. We bought those calls at the beginning of March, and guess what? It's still running. So when a stock like that is continuing to run, guess what? You just gotta, take advantage of it, right? Take profit where you can take profit. And trust me, you will understand a lot more about the markets when you just start taking profit. You're not going to say, oh, the market hates me, this and that. Take profit on time. Take profit on time. Let me check if there's any questions. No questions, that's fine. Anytime there's no questions, that's fine. But yeah, I can't stress it enough. Take profit, when the markets are running, when you're up. Don't wait till it's back down again. If Celsius comes back down to here, like it did over from February 18th to February 25th, you're going to get clapped and you're going to lose money, right? See the drop. Don't get, if it takes off, we've been in Celsius, took off, take advantage of it. Take your profit, make your money, get out. Oh wait, hold on a second. Someone just DM me, said they can see Exxon, not Celsius. All right, now can you see Celsius? Let me know if you can see Celsius chart. So Celsius calls around here, right, when it pushed up. Celsius proceeded to run from $27 to $38. Our calls expire in a few weeks. And again, so much opportunity when you just take profit at the levels you're supposed to take profit at, right? The blue line is, where I would set a take profit. Back in the zone is where I was taking, or below the moving average is where I'd set a stop loss, right? So I've bought my first contracts of Celsius around here. When it pulled back again here, we bought some more and we just kept trading it upwards. Again, look at Exxon. Just took off today. And yeah, there was multiple call entries. One, another one here, all the pullbacks along the way. Yeah. So I like that. I like that kind of trade. Again, I use the tools in my fingertips. These are free tools. I go on Yahoo Finance. I figure out what's going on. I understand what they're talking about. I listen in, to markets. I don't just go in there with no idea what I'm doing, because if you do that, yeah, you'll take L's, right? This is Yahoo Finance. Look, stocks whipsaw into rally mode as yields surge. So yeah, the markets are rallying. So then if you read that and your inputs, just get out, right? You shouldn't be inputs. They said 2 minutes ago, stocks are rallying. How much money do we need to start with options or swing trading? So most people that are beginners in my group start with 300 to 500. I'd always recommend at least 300. You can start with less, but you're really you're causing yourself some stress. You don't need to do that. But again, you can start with less, but I recommend 300 to 500. What else? I mean, doesn't matter who you are, right? If you think you can start trading with 300, go ahead, try that. Nothing wrong with that. But I always recommend 300 to 500 at least minimum, right? What if you miss it? Can you set a stop loss for these? Yeah, you can set a stop loss. It's called a stop limit on Robinhood. It depends what you use, but yeah. So again, Yahoo Finance, right? I've got my watch list out here. It says SMCI is down 2%. What I need to do, go to SMCI. All right, yeah, see how it keeps pulling back lower, pulling back to go lower, pushing up to go lower every time. So for a beginner trader that doesn't have doesn't have a lot of starting capital, what stocks would you recommend starting with? Are you swing trading or are you day trading? And are you options trading? If you don't have a lot of capital, it's interesting. Honestly, I'd recommend you just build the capital a little bit. Yeah. I mean, if you don't have a lot of capital, trade these kind of stocks for Hood, the ones that are a little bit cheaper, SoFi, like $10. Trade those kind of stocks. If you're a beginner that doesn't have a lot of capital, trade those kind of stocks. The SoFis, that kind of stuff. SoFis, Robin Hoods. Um, yeah. Let me know if there's any more questions because this market is 57 minutes. We're looking at what we're swinging into next week in the Discord. We'll probably be back live again in there in a sec. So make sure you just check out the Discord if you ain't in the Discord already. If you're in there, then you know where to find me. Any other questions? Let me know. But yeah, like I said, this is the first of a few different sessions. It's just kind of like the basics, the intros. Will this recording be available in the Discord? Yes, it definitely will. The recordings are always available in the Discord. There's a nice section that's called what's it even called? Recorded sessions, I think it's called. I think it's called. Let me find it real quick. It is called. Yeah, it's called recorded sessions. So yeah, recorded live sessions is the channel on the Discord, and yeah, all these are available there. All the recordings, all the study sessions, like last night's study session, all of them uh, are available. Do you have to be glued to the screen all day to make money in the market? No, the best trades are actually like these trades, right? We buy here, doji. We buy here, test the moving average. We buy here above the 200 and the 9 and the 21, and we just let it cook. That's what we do. Best trades are like we did yesterday. But we buy when it breaks out the zone and we leave it. We leave it. We leave it. The best trades that I've ever taken, um, even there's a couple of stocks that I traded earlier this year, right? These are my best trades of the year, right? This, you can see my little white lines marked out. We got in here, we took it to here. We just put the trade in and we just left it. We didn't look at the screen all day. Like our trading style in the Discord is really just, it's more because 99% of people in our Discord have a 9 to 5, they have work, they have jobs. So I don't know what you guys do, but they have work, they have jobs. They can't look at the markets all day long. They cannot. They come to the study sessions after hours, that's fine, but they can't look at the markets all day long. Folks that want to be staring at the markets all day long, it's not healthy. But yeah, we don't be staring at the markets all day long. We don't be glued to the screen. We go out, do our stuff, whatever. But when we swing trading, we like this kind of stuff. Swinging to the downside, same thing. HIMS, same thing. We did the same thing with that one. We got in at 26. We sold at 68, 69, whatever. It started selling off. We don't stare at the market all day long. Are those the main indicators that you use? Yes, Jeffrey, great question. You bring some questions today. I like it. So my main indicators are the 9, the 21, and the 200 moving average. And then, of course, I use my own support and resistance. I used to use MACD RSI. Not so much anymore, just to kind of gauge where price goes. Yeah. Great question, though. Any other questions? It can be about anything options related. It can be anything about trading related. It can be whatever you want to know. We only have a few more minutes on this, then I have to get back to the being live in the Discord because the market is still open for another 55 minutes. So let me know. Again, does this time work for you guys? Like, let me know as well. That should be good as well if you let me know if this time works for you guys. Because if it does, then we can stick with it. If it does, we can stick with this time. JPM shot up, right? Sessions. Yes, I will. Even though I did do a session on that in the Discord last week, but I can do that for you guys. If there's anything else, let me know. Let me know. I did do a session on support and resistance in the Discord last week, but it's okay. Look at that. Support on on PayPal, bounce, remember? Are those indicators used on each chart time frame? Yes, they are. Again, JP Morgan breaking above levels. It was level of support. We're going towards that resistance level. So this could be a nice time to swing calls, And if you look at the structure on it, we're not going into market structure today. You're starting to form, right? Kind of broke structure, starting to form again. Kind of broke out, you see? But we're starting to form again. Support and resistance is so key to this trading strategy, to this trading style. So are the EMAs. Look at Apple balancing on those levels there. Any other questions? I'm just trying to find the next swing play to go into the market with. That's what I'm going to be the next 40 minutes. If no more questions, I'm going to give it one more minute, round out the hour. But everyone understands, everyone understands this, right? That when we buy, we can win, but we can also lose. And, doesn't matter what you do, you need to know that, volume, open interest is important, right? I think I asked last night, but maybe you can go in depth. Out of all the stocks out there, how do you know which ones to trade on each week? Hey, great. Benji, good to see you again. So you did ask that in the session last night, but how do I know which one to trade on each week? So here on the right side, I have my watch list, right? I have Tesla, AMD, Apple, QQQ. I have Exxon, Alibaba, PayPal, Walmart, ServiceNow, right? I have all these stocks on the right side. So that's a good 2, 4, 6, 8, almost 10 stocks. And then I have on my Yahoo Finance, I have a watch list. These are the stocks I like trading. That's how I know which ones to trade. And as I go through my day, I look at the different setups, right? Same thing I should have done this morning with through them thoroughly, just one by one. Look at that, look at that, right? Just go through thoroughly and look at them one by one. Hopefully that makes sense. Thank you for your time and information. Very much, very informative. Much appreciated. Thank you, Jeffrey. Thank you for keeping it interactive as well. Any other questions? This is your time with me. This is your time. This is the time people usually pay for in the mentorships, in the one-on-ones, all that kind of stuff. Obviously, we didn't go in depth, but we definitely did touch a few things. But we touched real basic stuff today, which is good. Is there anything you look for to add and remove them from your watch list? Yes, nice setups. If I want to add you to my watch list, You need to make sure that the daily time frame, the weekly time frame, you show me something. This is great. Pure bearish from 1100 all the way down here. I like that. If you look at any of these, look at Walmart, been rising last few days. There you go. PayPal, hit my level of support. That's all it takes. Can you show how to put a stop loss on a trade on Robinhood, or do you have any videos on that? Yeah, I do have videos on that. If you look around this channel, you will find it. So if you just type, I think, Robinhood or stop loss or stop limit, you should be able to find it, because you have stop markets, stop limits. So yeah. Hopefully all of this is making sense to you guys, though. Any other questions? I'm itching to go find the trade of my team in a Discord. So it's probably what I'm going to go do now. It's been a good week in the markets, It's been a real good week. So there you go. Broke out my zone. Yeah, this is easy money. They're going to pump it to 440, 455 lifetime. This is what we called it in the Discord earlier. Crazy. Look at the 5-minute chart, though. Just pulling back to go higher every time. If you are a beginner, would you recommend starting with the indicator you're using today? 1000%. If you're a beginner, look, if you're a very, very, very new trader, fresh new trader, straight out of the womb trader, you need support and resistance. You need some moving averages as indicators. You might need an RSI or a MACD, not necessarily, but you could use one of them as well. But yeah, 1000% use what I'm giving you, That's one thing I like to do in my one-on-ones, just go through the indicators, show how I use them, explain how to, spot the reversals, spot the continuations, trade momentum, all that kind of stuff. That's what I do in one-on-ones and mentorships, all that kind of stuff. Right? Yep, QQQ doing it. QQQ doing it. QQQ doing it. Do you look for fair value gaps too? Yes, at times I do look for fair value gaps, actually, especially when I want to see price come and just touch the fair value gap, or come and fill the fair value gap. Yeah, Steph, you know your stuff. It's good. Yeah, this is crazy. Wow. Should come back down now, yeah. But indeed, it's just some, as a beginner, basic trader, whatever. Can you go over that another day? It confuses me sometimes. Sure, we can do that. As a beginner, new trader, it's a few things you need to remember, right? Like, you're trading options. Keep a let's say a 2-1 ratio. So that means I don't even have it up here. 2-1 ratio is pretty much you knowing that when you're getting an option play, if I want to leave with 50% gains, then I need to be ready to take 25% loss. If I'm taking a 75% gain, then I'm taking a 37.5 loss. That's a 2-1 ratio. I'm leaving with this amount, or I'm losing this amount, and I'm holding. I'm taking my L at that point. 2-1 ratio: 20% win. 20% profit, 10% loss. 50% profit, 25% loss. I'm looking for 100% profits. I'll take a 50% loss. 2-1 ratio it will help you so much if you just use a 2-1 ratio to trade. It will. It really will. Any other questions? If not, I have 43 minutes to trade with my Discord live, and then we are, then it's weekend. So well, I guess that is it. Well, thank you guys very much. I'm going to be back to looking at the stock market. I'm going to drop a tweet. Let me know if you enjoyed it or whatever. And I am going to be doing a cash giveaway soon, so make sure you put the notifications on. Either way, guys, 2025 is the year to make it in this market. Trust me, there's opportunities here, and I don't want you to miss them. Don't want you to miss them. If there's any time to, learn a skill and make it in this economy, extra $100, extra $200, extra $300 per day, per week, whatever. Trust me, guys. But yeah. Also, make sure you drop a like if you haven't dropped a like yet. Yeah. I don't know when the markets are going to recover, but when they recover, make sure you get a piece of it. Make sure you get a piece of it, folks. Make sure you get a piece of it. And we're going to get a piece of it together. All right, people. That's enough for one day. Tesla 250 again. See? Bounced my level of support, took off. Some people call this a double bottom. Not completely, in my opinion. But yeah, folks. That's it. Show love on the last tweet. And I will see you guys in the next one. Appreciate you guys. See you soon. Can you do options on the weekend? No, you cannot. Options are Monday to Friday, 6:30 to 1 p.m. Pacific time, which is what, 9:30 to 4 p.m. Eastern time. At least that's what it was when I was on the East Coast. And it closes Friday. So yeah, in 28 minutes, never mind, in 38 minutes, the markets are closed and it is done for today. So make sure you wrap up your profits, take those profits, enjoy your weekend, go eat some good food. Wow, SPY jumped $14 today. We called it in Discord. They called it. J Money, shout out you. That was incredible. Wow. Yeah. I like seeing them winning. They're winning. I like it. He said it's up. Okay, he put the new level in there. Let's go.